Mswati inkosi ithula akayithathe akahambe nayo yadenza bakhe wone
The time is 2 p.m. You're watching yet another edition of Market View right here on Eswatini TV. I am Nautilus Tole. Glad to have you on the program. Loan guarantee schemes are emerging as a key financial tool to improve access to credit for MSMEs in the country. As Eswatini continues to prioritize entrepreneurship, youth enterprise and agricultural development, what about the uptake, impact and certainly the challenges faced by MSMEs in accessing these guaranteed loans? We'll hear from the Director of MSMEs in the Ministry of Commerce. Also on the program, with youth unemployment estimated around 56%, and between 18,000 and 22,000 students currently enrolled in tertiary institutions, how do we move from qualification on paper to sustainable income, innovation, and economic participation? Recently, the Eswatini National Youth Council and Enactus Eswatini signed a memorandum of understanding aimed at accelerating youth entrepreneurship, innovation, and definitely employability. This afternoon, we unpack the details and the expectations behind this newly forged partnership with the ENYC. But first, our business stories. In our business stories, we begin with this. The Ministry of Commerce, Industry and Trade introduced loan guarantee schemes which are housed under the Central Bank of Eswatini to help local businesses access finance by reducing collateral requirements and sharing risk with lending institutions. However, the Central Bank has said there has been low uptake of these schemes to date. Today, we speak to the Director of Small and Medium Enterprises, Mluleki Dlamini, who will unpack these schemes and explain how local businesses can access them and benefit from these important support initiatives. Nkosi, thank you very much for your time. Perhaps you could just start us off by defining a loan guarantee scheme. When you look at it from the context of MSME financing, what type of funding mechanism is it really?
Thank you very much, Notsile, and greetings to the viewers and the business community. One can start off by explaining that the small-scale enterprise loan guarantee scheme is basically a facility where we guarantee a business loan that has been issued by a commercial bank or a non-bank financial institution in support of a business with a viable business plan. So basically, what then happens is that we cover 95% of that loan that has been extended to that business, and that business promoter will have to come up with 5%. That is for a startup business. But what we've done for the Youth Enterprise Revolving Fund, we've signed up to 80 or 98%. So it means the youth can come up with 2%. Then for already existing businesses, we cover up to 85% of that loan that has been extended to that business. One would have to clarify that we do not loan directly to businesses, but we guarantee the loan that has been granted through a non-bank financial institution or a commercial bank. Then after that, that business is able to then continue with their activities, whether it's expansion or whether it's a startup business. So this is a guarantee facility, not that we lend through this facility, we guarantee through this facility. Thank you.
From your side, Nkosi, what's been the level of uptake of these schemes, and how would you say, what's the number of the MSMEs that have benefited, and specifically in what sectors?
They've benefited across all sectors. Since inception, we've covered over 2,000 businesses, and with a total of about 300 million that we've already covered. which were basically loans from commercial banks and non-business financial institutions. All of those loans have been guaranteed. But of note is that we've seen a high number of defaults in terms of these loans, and it is very worrisome because it will deplete this guarantee, and we need to find ways in which we can try and address these issues of business failures, which then at the end of the day end up affecting the balance of the scheme, and also the issue of high defaults coupled with the low uptake of the scheme. I think we really need to address that while we're battling with the issue of low uptake, which is basically something lower than 25% as we speak.
What would you say have been the barriers preventing the uptake or resulting to the low uptake of the guarantee loan schemes?
One realized that there seemed to be a mismatch in terms of the products that financial institutions have, which relates to business support in terms of finances. So it's one way that we'll have to try and see how best we can align the two. Then after the two, we'll see an increase in the uptake, and also the issue of poorly prepared business plans that are not convincing to any funder, which basically then tend to then lead into business failures in some instances.
My final one, because given that it's actually availed through banks which have their own lending products, how does the ministry ensure that the guarantee scheme, it complements rather than competes with existing bank offerings? I'm just questioning from a point of the sustainability of the scheme in itself.
Definitely, there are complementarities here because the banks loan against their products, their offerings, and what we do through CBE, we guarantee those business loans, and it's one way of de-risking in terms of business financing that we are bringing on the table in terms of supply chain financing for businesses. That is what government is achieving in this respect.
Ngosiwilivike, thank you very much for your time. That was Director MSMEs in the Ministry of Commerce, Mleleki Dlamini, sharing insights on the loan guarantee schemes. And moving on with the program, or our business stories rather, the Eswatini Revenue Service has reported that as of the 31st of March 2025, the total debt stock, which is money owed to the service, was at 6.352 billion emalangeni from an opening balance of 5.5 billion emalangeni, reflecting a 14.9% increase over the 2024-2025 financial year. In their annual integrated report for 2025, the service states that this was driven by a significant increase of at least 29.7% in VAT debts from an opening balance of 2.8 billion emalangeni to 3.7 billion emalangeni. Similarly, company income tax and pay-as-you-earn debts increased to 1.4 billion emalangeni, a bonus or an addition of 3.8%, and 1.15 billion emalangeni, a bonus of 2%, respectively, during the year under review. On the other hand, there was a notable decrease of 75.5% in other income taxes attributed to the persistent collection efforts undertaken during the year, including the Sonzela Skulume tax debt campaign and improved debt payments by the government in the final quarter of the year. As at the end of 2024-2025, the debt-to-tax revenue ratio is recorded at 43.6%, still above the set target of 40%. The service has reported that taxpayers increased by 8.4% from 16,744 to 18,145. Personal individual taxpayers increased by 5.7% from 40,195 to 42,484. Pay-as-you-earn taxpayers increased by 1.1% from 9,000 318 to 9,425. VAT taxpayers decreased by 31.1% from 5,569 to 3,877. Fuel taxpayers remained the same. In 2024-2025, the ERS paid a total of 3.3 billion emalangeni in refunds, indicating a 41.8% increase when compared to the previous financial year. 3.5 billion emalangeni, 98, which is actually an addition of 90, or rather an equivalence of 98.67% of these refunds were for VAT, whilst the remaining 47.3 million emalangeni was from income taxes. Revenue collections for the financial year 2024-2025 amounted to 14.6 billion emalangeni against a target of 14.5 billion emalangeni. And that is your business brief this afternoon. After the break, we'll speak to ENYC. Stay tuned.
Hello to all the viewers of Eswatini TV in the kingdom and beyond. Eswatini TV is regulated by the Eswatini Communications Commission through the Broadcasting Code and Broadcasting Guidelines. Under these instruments, the station commits to broadcasting information and news that have been fact-checked, programs and content in respectful language with no elements of hate speech, violence or sexual activity. If you hear any unsuitable content on this channel, you have a right to voice your complaints with the station management. Should you not be satisfied with the response or action taken, you can escalate your matter to the Communications Commission at PO Box 7811 Babani. Call 2406 7000 or send an email to info@esccom.org.za. For more information, visit www.esccom.org.za.
Welcome back. You're still watching Market View. Moving on with the program, the Eswatini National Youth Council and Enactors Eswatini have signed a memorandum of understanding that promises to strengthen entrepreneurial training, expand opportunities for graduates, and integrate mindset change and psychosocial preparedness programs. Sibonga Gonke Mamba, ENYC's Communications and Public Relations Officer, joins us in studio to unpack what this agreement really entails. Mamba, thank you very much for your time this afternoon, Tulini. You could just tell us a bit more about the MOU. What are some of the gaps in entrepreneurship and youth employability that necessitated the agreement or the partnership with Enactors?
Thank you very much, Notile. Good afternoon to the viewers at home, especially young people. So we did sign an MOU with Enactors as the Eswatini National Youth Council. So now the MOU, it actually formalizes our collaboration and our partnership in advancing and accelerating youth entrepreneurship and employability. So now, as you would already know, that Enactors' mandate is to promote entrepreneurship, to ensure that young people are trained on entrepreneurship, to ensure that young people are mentored in their businesses and their different ventures. The ENYC, on the other hand, complements this by providing mindset change program or training. It provides life skills education. It provides access to national programs. The ENYC also ensures that we advocate for policies that support these youth-led enterprises. So now the gaps that we have seen that actually necessitated this MOU are that young people, Notile, they still struggle with issues of of formally registering their businesses. They struggle with issues of, they do have ideas, but they really struggle in actually venturing into those businesses and ensuring that their business ideas become successful. So now the partnership with Enactors will ensure that we mentor those young people, ensure that we provide them with business skills and training. The ENYC has started a program, for instance, that teaches young people or educates them on business plan writing. So those are some of the programs that we will implement with Enactors co-jointly to ensure that young people thrive in their businesses.
When one thinks of the marriage between ENYC and Enactors, we're looking at it from a point of entrepreneurship, also from a point of skills. Does this MOU then come with any financial commitments to say perhaps ENYC has this number of people and Enactors requires this number of skills? Any financial commitments here?
Well, yes, it does have a bit of financial commitments, and as much as the ENYC does not provide funding directly, we did ensure that we will ensure that we work collaboratively in resource mobilization strategies that we will implement together with Enactors. Enactors, on the one hand, provides or offers USAID funding, offers grants, and also offers investor partnerships with youth-led enterprises. And the ENYC, on the other hand, will seek to provide or to link those young people to government programs, to civil society or private sector programs that will ensure that they get the funding that they need or the resources that they need to thrive in their businesses.
The work done by Enactors, Ngozi, touches mostly on skills capacitation. Given that our youth unemployment rate currently stands at least 56%, what targets does then the ENYC have under this MOU in partnership with Enactors to reduce this figure? It doesn't really have to go down by 10%, but we need to see the progress.
Okay, so what we are looking at, we want to ensure that we reach to over 1,000 young people annually. Okay. Though this is the start, but we will also broaden it moving forward, but we want to ensure that annually we reach to more than 1,000 young people in entrepreneurship, internship placements. I think you would already know that we are with UNDP in the Youth Empowerment Program that offers internship opportunities for young people. So these are part of the programs or the initiatives that the ENYC will work on to ensure that even those that have graduated from the Enactors program are also get to access such programs and ensure that they get to have practical know-how of what they have learned.
The 1,000 young people per year target, is that young people that are currently at tertiary institutions part of the Enactors programs, or it's just young people from the 4 regions of the country, whether academic background or not, whether qualification or not, whatever skills that you have?
It is all young people. However, yes, we will ensure that those that have graduated from Enactors and have the skills are also able to access the programs that come with government, the ENYC, and our partners.
Every time we speak to the ENYC, you always bring up the word mindset change. In economic terms, what indicators then prove that psychosocial preparedness rather translates into employment, enterprise growth, and the boldness from young people to say, we want to start businesses, we want to be sustainable? Have you seen that really having the desired benefit you wanted to have?
We have seen positive outcomes in our Mindset Change program where young people now, they think positively of their situations. We have seen positive outcomes when young people have been rooted in thinking that their surroundings, they can only go as much depending on the surroundings that they find themselves in, their environments. So we have seen progress in as much in speaking of when we speak to young people on scarcity versus abundance. So we have tried to have young people think broader, think beyond scarcity, but think of abundance in their setup, in their respective environments. So we have seen young people actually venturing into different economic income generating activities because they have been able to see the positivities around their environments and also to tap into opportunities that have been provided by the government, by our partners. So they have really taken a different step or the different direction from what they have been thinking about scarcity, and they are now thinking, oh, I can actually do this. Oh, I can actually do that. They now have confidence to actually venture into different ventures, their enterprises, and to also get to test the ideas that their business ideas that they have and see that it is actually it can actually work
and see that they can actually build this economy.
Yes.
That was ENYC's Communications and Public Relations Officer Sibonga Gonke-Mamba sharing insights on the recently signed Memorandum of Understanding with enactors in Eswatini. After the break, we speak to in-house economist Sanele Sibia. Stay with us.
To all the viewers of Eswatini TV in the kingdom and beyond. Eswatini TV is regulated by the Eswatini Communications Commission through the Broadcasting Code and Broadcasting Guidelines. Under these instruments, the station commits to broadcasting information and news that have been fact-checked, programs and content in respectful language with no elements of hate speech, violence or sexual activity. If you hear any unsuitable content on this channel, you have a right to voice your complaints with the station management. Should you not be satisfied with the response or action taken, you can escalate your matter to the Communications Commission at PO Box 7811 Babani. Call 2406 7000 or send an email to info@esccom.org.za. For more information, visit www.esccom.org.za.
Welcome back, and for the final segment of the show, in-house economist Sanele Sibia joins us virtually. Mr. Sibia, good afternoon. Thank you very much for your time. So reports have it today that European financials are bouncing back, Japan is rather underperforming, and the US is currently on holiday. It is a holiday, actually. What's your observation?
Thank you, Notsile. A good afternoon to you, and also a good afternoon to the viewers. So I think what you've just, highlighted really just signals what markets are doing. We're seeing the impact of the holiday season in Japan, and, it's just one of those thinly traded. And then we're also seeing, the same story in Hong Kong with Beijing closed, being the beginning of the year of the horse this time around, and then coming into the US markets and the futures markets are really just reacting to what we are seeing happening in terms of the inflation figures. So inflation just came in a bit cooler this time around, and it's getting closer to that Federal Reserve. That Federal Reserve Bank is target of 2%. So now that is a bit of a calming factor within the markets. So when you're looking at what is happening there, we can see the Dow Jones Industrial Averages rebounded, but just closing a bit shy of the 50,000 mark before the holiday season, gaining some 48.9 points. And then the Nasdaq Composite Index somehow just took a bit of a knock, losing some 50 50.48 points. And if you remember, before the worries around the AI trade and the AI profitability and the impact of AI on markets, because it's what traders are looking at, what the impact of AI is going to be on the job market and quite a number of things that we do. The Nasdaq Composite Index was sitting at a comfortable 24,000 in terms of all share volumes, and it was just about to touch that 25,000 mark until we started seeing those worries, re-emerging around those AI, those AI considerations and those AI stocks. But we can see that the Standard & Poor's Index is actually rebounding to 6,836, getting some 3.41 points. In as much as the magnitudes are not that much, but in terms of direction, we're seeing that, those those blue chip heavy stocks actually on the positive, and then the tech heavy Nasdaq Composite is somehow taking a knock. And then moving on to Europe, when we get to Europe, we're seeing quite a contrasting picture to that which we are seeing in the US. So broadly, all gains in Europe are being led by the rebound in the financials and also the continuing rally for those luxury stocks. In Europe, we're seeing a 20.52 gain in today's trade. Also, we are hearing talks coming out from number 10 there, just saying, what are we going to do around defense? Where Keir Starmer is saying is going to ramp up defense spending in the US, and markets are in the UK. Markets are reacting to that. In Germany, the financials are continuing to put somewhat of a rally in the market. So we are gaining some 23.42 points in today's trade. Moving on into Japan, we know that it's those celebrations of the Japanese New Year, the start of the year of the horse, as it is commonly known according to the Asian lunar calendar. So the Nikkei has lost around 135.56 points, as investors were anticipating what is going to happen, in the long term during the holiday season. So taking those defensive positions there, the Hang Seng there getting some 26.705.94 points in today's trade, largely driven by the fact that we're seeing a bit of a rebound in the Hong Kong market. And we are seeing a bit of an expectation of an extended stimulus coming through from China. So that is what those markets are reacting to. Shanghai, the mainland, is closed today for that celebration of the New Year, according to that lunar calendar in those Asian countries. Johannesburg Stock Exchange is, a bit steady at 121, but not just really really a bit miles away from the all-time highs we saw last week of 124 and 125 in terms of all share volumes. But this is to be expected, not only because we are waiting to see, employment data in South Africa coming through. And we are waiting to hear from the budget. We saw, that President Ramaphosa really gave a very good State of the Nation address. But what markets really look at is the budget, how much of that wish list is actually going to get done. In Eswatini, we're seeing, trade moving up to 493.33 in today's trade. We had a new listing in the Eswatini Stock Exchange, and now that has somehow built the movement up. We're seeing the new kid on the block, which is AG. Which is AG Capital, and that is somehow just moving the stock, the capitalization of the stock markets. It's called AG SPAC, so that's moving the markets up in Eswatini. Gold remains above the $5,000 mark, but just coming down a bit because we're seeing a bit of some talks between Iran and the US, and also we are seeing that inflation in the US is coming down, and that's going to change the posture of the Federal Reserve Bank. While oil is also just showing signs of an upward movement, but overall a bit lower than the highs that we saw last week, largely driven by the fact that we are seeing, Ukraine promising an election, and then we are seeing Iran and America, they're trying to work out a deal. The board of of Peace was meeting last week, and we're expecting not to get an outcome from that. The Lilangeni remains strong at 15.96 against the dollar, 18.93 against the euro, and we also strong 9.64 against the Japanese yen, largely driven by that gold rally. But markets are somehow taking a step back, waiting to see what the budgets are going to look like come next